The date is September 16th, 1992. Inside the Bank of England, panic is spreading like wildfire. Phone lines explode. The trading screens leak red. Britain's central bank is losing billions, and there is nothing they can do to stop it. Across the Atlantic, one guy sees the chaos he created. George Soros, the predator who saw what no one else could, a deadly flaw in an empire's armor. In about 24 hours, he reduces a sovereign nation to its knees. No armies. There are no weapons, simply cold accuracy and a $10 billion wager against the British pound. The world will refer to him as the man who broke the Bank of England. Who is George Soros? Before we get into how George Soros rattled an entire country's financial system, let's first establish who he is. Soros was born in Hungary in 1930 and survived the Nazi occupation during World War II. He eventually made his way to the United States, where he established himself as one of the most successful hedge fund managers in history. He launched the Quantum Fund, which went on to provide some of Wall Street's most legendary returns. Soros was more than just another investor. He was a macro trader, which means he made large wagers on long-term economic patterns, including currencies, countries, interest rates, and entire financial systems. His style was simple and bold. When he thought something was broken, he went all in. And in 1992, he noticed something drastically wrong with the UK economy. The economic time bomb called the ERM. To understand what happened, we need to discuss something called the exchange rate mechanism. Simply put, the ERM was a European system designed to keep currency stable and closely connected. The United Kingdom joined in 1990, agreeing that the British pound would remain within a defined range against the German Deutschmark. Sounds lovely and organized, right? The difficulty was that the UK economy was not strong enough to keep that promise. Britain saw significant inflation. Interest rates were uncomfortably high. The economy is slowing down. Meanwhile, Germany's economy remained strong and stable. To keep the pound in the ERM range, the Bank of England had to regularly intervene, buying pounds and hiking interest rates to make the currency appear appealing. But Soros saw the truth. The pound was artificially held up. It was pricey and it wouldn't last. Soros smells blood in the water. George Soros did not suddenly decide to assault the British pound. He analyzed the numbers, he studied politics, he studied psychology, and everything turned to one conclusion. The UK could not continue to protect the pound. Raising interest rates was crippling the economy. Homeowners were hurting. Businesses were struggling. The government was under tremendous pressure. Soros understood that the Bank of England was trapped. If they continued to defend the pound, they would destroy their own economy. If they stopped defending it, the pound would plummet. Regardless, something had to shatter. So Soros did what he does best. He began shorting the British pound. What does shorting the pound even mean? Simply put, Soros predicted that the pound would decline. He borrowed large sums of British pounds and sold them, intending to repurchase them at a later, lower price after the currency fell. And when we say enormous, we mean really massive. According to some calculations, Soros had established a stake of more than $10 billion against the pound. This was not just a bet, this was an all-out financial assault. Finally, the day everything collapsed. September 16th, 1992. This day would go down in history as Black Wednesday. The Bank of England responded with everything it had. They spent billions purchasing pounds. They hiked the interest rate from 10% to 12%, then declared that they will increase them to 15%. They were attempting to intimidate merchants into backing off. It did not work. The markets detected panic. And what about Soros? He pressed even harder. Additional merchants joined in. The strain became unstoppable. By the end of the day, the British government declared defeat. Britain withdrew from the ERM. The pound has fallen. Soros won. How much did Soros make? The number is legendary. Approximately $1 billion in profit in one single day. Let that sink in. One dude, one trade, one day, $1 billion. Meanwhile, the British government is projected to have lost $3.3 billion in its effort to safeguard the pound. And that's when the newspapers gave Soros his legendary nickname, the man who broke the Bank of England. How does the Britain actually benefited? This is the ironic part. In the long run, quitting the ERM benefited the British economy. Interest rates finally went down. Exports grew more competitive. The economy has rebounded. So, in a particular way, Soros did more than simply reveal a dysfunctional system. He forced it to repair itself. However, as Britain recovered, Soros' narrative did not finish there. In reality, this victory represented the pinnacle of his legend. After 1992, George Soros became more than just a trader. He became a myth, a marketing whiz, a financial genius, a man capable of breaking countries. And that reputation came with a veiled threat: overconfidence. Soros later admitted something important. I was aware that I was getting old, but I didn't realize how much it was affecting my judgment. The online business boom exploded in the 1990s. Technology stocks were skyrocketing. Internet companies that made no profits were worth billions. Logic had exited the building. Soros did not really believe in the bubble, but he did not want to miss out. So he did something unexpected for him. He began chasing the market rather than managing it. What was the result? His fund became volatile. Some years were still nice while others were awful. When the dot-com bubble broke in 2000, Soros lost billions. Not simply paper losses, losses that are real, unpleasant, and can shake one's reputation. Soros also faced significant knocks during the 1998 Russian financial crisis, the Asian financial crisis, several poor macro bets in the early 2000s. His fund reportedly lost more than $2 billion in a short period of time. The man who had previously broken the Bank of England was now discovering something brutal. Even legends cannot triumph forever. People do not talk about the mental burden that comes with trading. Soros was not only managing money, he was balancing expectations, headlines, and his own narrative. Every loss felt larger. Every error seemed public. He once stated, "I'm only rich because I know when I'm wrong." However, admitting your mistakes becomes more difficult when the entire world wants you to be correct all the time. By the mid-2000s, Soros began to withdraw from active trading. Not because he was broke, far from it, but because the stress was immense. The markets have altered. He no longer felt as keen as he previously did. He changed his concentration to philanthropy, donating tens of billions of dollars through the Open Society Foundation. Soros has donated more than $30 billion to causes around the world. People adore the narrative of how Soros broke the Bank of England. However, the deeper lesson is more interesting. He didn't beat Britain by luck. He outperformed them by grasping reality before they did. And later in life, when he started losing, it wasn't because he got foolish. This was because the world changed. The game changed. And even the finest cannot outrun time. Some people view Soros as a merciless spectator, a man who invaded nations for profit. Others describe him as a market realist, someone who reveals defective systems. What's the truth? He is both. He did not cause Britain's troubles. He just revealed them at a very high cost. Even today, governments continue to control currencies, fight market forces, defend the indefensible. Another trader, similar to Soros, is constantly monitoring, waiting, and calculating because markets do not care about promises. They care about reality. The 1992 bet is still called the largest trade in history. not because of money, but because it altered a country's policy. It humiliated the government, and it demonstrated that markets are stronger than politics. The story of George Soros and Black Wednesday is more than just a financial one. It also serves as a reminder of how fragile systems, nations, and even legends can be. One precisely timed decision altered a country's financial future and resulted in one of the biggest deals in history. But it also demonstrated a deeper truth. Markets always prevail in the end, and no one is unbeatable forever. Soros not only broke the Bank of England, but he also demonstrated how power works in finance, and his subsequent defeats serve as a reminder that even the sharpest minds must eventually relinquish control and allow time to work.